Hi everyone. We thought it is the perfect time to reach out to you when the economic prints are not very good. At the same time, the market prints are pretty decent. Well, that's the dichotomy that is called markets. But why is the market being in a cheerful mode whereas the economy is not? Well, there are aspects to it. If you look at the segments within the market, there are segments in the market which are doing well, and hence you're seeing good returns being made there. It is not that everything in the market is moving. That's the beauty of our markets. Even going into FY21, we believe that the Indian markets are likely to exhibit the same kind of traits, where there is earnings visibility in a segment of market. That is where you will see funds putting their bets on. What are those areas? Those areas, we believe, are the private corporate banks, some of the PSU corporate banks as well, the telecom companies, and then some cyclicals. In cyclicals, global cyclicals, as well as some domestic cyclicals. At the same time, we do not see too much of capex happening in the near term. So domestic capex and some of the IT and pharma side where we see challenges still going around in the world are places where you are not likely to see too many funds taking a big bet on. In FY21, the consensus estimates are anywhere between 25 to 30% of earnings growth. However, we don't believe that that kind of earnings growth is actually going to come. But even if you get 15 odd percent kind of earnings growth in FY21, which will be primarily led by the kind of sectors I told you about, then the market returns could also mirror that, unless of course you make a case for a derating of the multiples. Now, a case for a derating of multiples might be made if the economic growth indicators do not improve from here on. So let's talk about the economy per se. Of course, the GDP prints have been lower than what we would have bargained for. But we have to keep a few things in mind, that some of the macro data points are actually pointing to better data points in the future. What are those data points? If you look at forex reserves, the forex reserves of our country have gone up by $50 billion in the last 6 months or so. That's a good 10-12% increase. In the last 6 to 7 instances that we have looked at the data of forex reserves of an increase of more than 10 to 12%, after any such increase, the economic indicators show very good momentum after 6 to 8 months of any such data. This is nothing but indirect liquidity being pumped into the market. Even the normal liquidity by the RBI is quite awash. It is the risk averseness which has made the financial institutions not lend. But we believe that at some point risk taking will come back and people will start lending. That is when we believe that the economy will start to pick up. At the same time, we expect the government to continue with its reformist agenda. The reforms may or may not happen during the budget itself, but it's an ongoing process. Some of the aspects that the market participants are expecting the government to come out with reforms is the LTCG, the dividend distribution tax, and some tinkering on the personal income tax slabs. We don't know which of these steps will be actually taken. But what we know for sure is that the steps will be something which will invigorate the economy. That is what the endeavor will be. We hope to come back and see you again around the budget with our views and change, if any. In the end, I would like to leave you with one of our Kotak Life philosophies in the way of investing, which is, we believe that top line is vanity. Profits add sanity, but cash flow is reality. That is how we take bet on our companies' cash flows. Thank you.